Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This card is by Royal Dahl. Those who don't believe in magic will never find it. Perception, no doubt, folks, is a trip. Whatever you think about, you bring about. Whatever you focus on grows. Market-wise, let's take a look at it out here. The Dow Industrials is down 98. NASDAQ off 15. S&P's off 9. Gold contract up $5.50, trading at $1,223 an ounce. Silver up 16 cents at $17.79 an ounce. Platinum up $7 at $1,332 an ounce. Copper flat at $3.03 a pound. Light sweet crude, $91.52 a barrel. Bonds, the ever-ready bond market, folks. 10-year up 7 ticks at 124.16. 30-year up 20 ticks at 137.12. King dollar down 68 ticks at 84.79. You get the euro up 6 at 128, and the yen is flat at 108.90. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so tomorrow is going to be the day we're going to go after that swing low, folks. Right now, we've hit a low on a cash S&P of 1983. We're at 1985. Your swing point out there from the 15th of September, where it rejected lower price, had lighter volume, was 1978. I suspect we're going to basically go right into that baby tomorrow with some follow-through. If we take a look at the correlation inside the SPY, what you have with the SPY is this. The SPY's done 82 million shares thus far. We'll bang out about 92 million. We're at 198.15, and yes, she's breaking the swing, and she has the juice behind the move. What you also have inside the SPY is that you're already inside the lower range, which is 199.06, and what that sets up is 190.55. Dow Industrials. You go take a look at the Dow Industrials. What you have with the Dow is this. Dow's down 99 bucks, and we are at 17,075. Guess what? Dow, blow off top, Alibaba, Apple, triple witching, all of the above. The odds of it pretty heavy, folks, meaning in the intensity that Alibaba could actually call a market in Hong Kong and call a market in the U.S. But the bottom line is that, you know, we'll see how this shakes out, but it looks like that's what happened here. One of the big clues will be basically can it break this lower swing from the 12th with volume. Right now, bottom line, that thing's going to be sticking out like a sore thumb. High volume, blow off high. We're going to take a look at the NASDAQ composite. What do we have with the composite? Composite's down, has some juice behind the move. Right now, you're down 15 bucks. Not that it's a big deal because the IBB, one second, I'm sorry about that if I didn't. The IBB has not broken apart yet, and I suspect that little baby will break apart, wants to break apart. We'll get into that for a second. So the IBB, the NASDAQ composite right now, we're at 45.12. Your swing point out here is 44.99. The three Qs, the NDX 100. What we have with the NDX 100, that's a sideways move out here. You have 24 million shares. The NDX 100 is going to need more volume to break down. We're only at 24 million. That thing needs about 38 million in order to get and to stay at lower price. Gold contract. Let's go take a look at gold. So what do you have with gold? Gold's been testing the June 2013 level as well as the January 2014 level. Has rejected it, has lighter volume. You got wide price spread today. You got accelerated volume. You got a sign of strength out here today. What I expect you're going to see out here now is that you're going to see gold start building some cause. You know, it basically did everything it should have done at the bottom. I suspect you're going to see some cause being built out here. We've hit a high at 12.37 today. We're at 12.23, so you can see that it has given up, quite a few dollars. But guess what? You get the volume behind this move. That's saying that well, here, let's go over to it. If you want to see something classic, folks, if you take a look at the XAU right now is at 86.45, and the XAU thus far has been coming into those two lower swing points, dramatically lighter volume, and today has rejected those swings. The swing we're talking about is from June of 2013 as well as the December of 2013. So, and all of them, just so you understand something, that's the XAU. If we go over to the HUI, we take a look at the HUI, and all gold and silvers are not created equal. I can tell you that. I just finished the gold report. It just went out. Bottom line is that they're not equal. And I'll give you, here, when we finish this one, I'll give you one heads up, and I'm trying to figure exactly what's going on with the amount of gold. But anyway, if we look at the HUI right now, Gold Bugs Index, up $4, absolutely rejected lower price, dramatically lighter volume when we're talking on the monthly basis, which is really cool too, folks, okay? You know, we're talking, let's see, 254 million shares are coming into 398, coming into 418. You know, and yes, we have more trading days left in the month, but guess what? It's not going to get close to doing those numbers. And what I expect, what you're going to see, which the HUI has already done, it got into the high of its swing low, rejected that level yesterday, and gone topside. That number is 206.98. Right now we're 207.38. And here's some, there's divergence inside this market. If we go look at AUY, Humana, there's something wrong with Humana. And this has happened before. You know, and this is, if you, depending what equities you do own, folks, keep your eye on these large breaks on a monthly basis, because it's not good. Because what is still hanging out here, and a few of them, Humana's one of them, is the low of 2008. Right now, Humana's at 659. That low's 330, way into the bar. This, on a monthly basis, already broke its swing low. It looks like it's going to have the volume. So the bottom line is that, listen, there's a couple great setups out here, too. My point is that just because you're testing the low in the gold market, it doesn't mean that all these equities are going to basically hold at these levels. Alibaba is giving back a little bit out here. We'll see how this shakes out. Let me just see something. So it's still not saying much out here. Alibaba is they're holding the line pretty good at this 87. We'll see if in fact they can get that thing to start breaking down. Apple is hanging up there. Apple is hanging up there. Bottom line is that in fact, it's some juice behind it out here today. Not juice to the top side, but price-wise. You're up $1.46. The benchmark on Apple is 100.72. IBB, and this is what the Qs are all about. It's all about Apple and the IBB. Now, the IBB today is dynamite, folks. Dynamite if you're a bear. And this is what it's doing. The IBB today, try to get up to 274. It's done 859 million shares. That's weak on a retracement topside. That's exactly what you want to see. Why? Because the IBB has a high volume low that's hanging out there at 242. It has another high volume low at 221. So I know it's deviant, but bottom line is that if you're going to go higher, that's what you want to see. You want to see it get up there, have lighter volume on that move. We take a look at the Eveready bond market, and this is just amazing, actually. But the bottom line is that you have the 10-year up 7 ticks. We're at 124.16, and guess what? She's going to be laying out at this 125.12 in about a heartbeat. The 30-year, same setup in the 30-year. 30-year strong like bull. 234,000 contracts on the 30-year right now. We're at 137.13. That baby wants to get up to this 139.02, and you know, if we take a look at the yields again, what you have, the yields and the 10-year again is at 2.5. So the bottom line is you're looking for a mortgage out there, get out there and get it, because you're going to get a mortgage, a 30-year, at about 4 or 3.9 right now, and that is one beauty. We take a look at some of the higher volume stocks out here. We have, let's see, Apple's up $1.50. You have Facebook down. Facebook's up 127. We have Cisco down at 24 cents. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
The path of of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow right now down 99. NASDAQ off 14. S&Ps are off 9. And as you come over to TFNN, folks, you're going to see right on the front page the virtual trading competition. We are giving away $10,000 in cash. That contest starts this coming Sunday. You have to sign up by this Thursday. So Thursday at noontime, folks, the computers will shut you out. Come on over to our website at TFNN. You can sign up right here, right now. Going to be an awesome contest. The contest, folks, is on the Nadex platform. And that, if you haven't tried that platform yet, it's a dynamic platform with volatility out here. You've heard the commercial many times, is that your trade is your stop, which is just the defined risk market, which is just absolutely fabulous. The first prize out here is going to be $3,000. Second prize, $1,500. Third, $750. 2 at $500. 5 at $250. And then each day of the contest, Monday through Friday, we're going to be giving away five $100 cash prizes, plus the art of timing the trade, just for trading. So check it out on the front page of TFNN. And inside the Nadex platform, folks, you can trade currencies, you can trade equities, currencies, indices, commodities. The bottom line is that it trades out there 23 hours a day. So there's something for everyone out there. Volatility's in the market, no doubt. The volatility, no doubt, has started in the currency market. And now what has happened is that it's moving right across the world. If we do go across the world and we take a look at last night, what you had happen. So in Asia, Asian numbers come out. They were great numbers, but guess what? That manufacturing numbers, it didn't do anything for the market. Shanghai was up 0.8%. You had the Hang Seng down 0.5%, and the Nikkei was off 0.7%. Europe got absolutely smoked today. We're in great shape, even though we're down compared to what Europe has done. The FTSE was off 1.4%, DAX to 1.5%, and France 1.8%. If we go over to the FTSE and we take a look at it, what you're going to see is that you have wide price spread, accelerated volume. You get some real destruction happening out here. FTSE was down $97 at 66.76, and all it took is basically 2 days to turn around and give back to April of 2014. Your swing point that it's going to be going after right now is 6,500. We'll see. Probably take a couple days to get there, but that baby's going after it with a vengeance. We go to the DAX in Germany. She came down 154 points. Not as heavy, but the bottom line is that she also has. Now, the DAX in Germany, which is amazing, actually has 3 separate lower lows than our benchmark, which is the February 5th level. So the DAX in Germany basically, at this point, is the leader, number one, on the way down. You have those 3 separate lower price points with volume. Now we have 2 higher lows. No, 2 higher highs. Let's see, no. 2 lower highs. The first high that was generated out here was the 20th of June. The second one was the 19th of September. That's on the weekly basis. Bottom line is that you're going to be seeing lower price in both of those indices. That correlates coming over to our own market. The real key is going to be how we hit the swing point, and I expect what you're going to see, you're going to hit the swing point tomorrow. Inside the Dow Industrials, the weakness is United Healthcare, Disney, Microsoft, and Cisco. In fact, it's pretty wild inside the Dow. So check this out. There's only one stock inside the Dow that's positive right now. It's J.P. Morgan up 19 cents. Goldman is down 4 cents, and the Goldman today would be considered a leading stock inside the Dow Industrials. United Healthcare is off 104. You get Disney down 91. Microsoft is off 49. You get Cisco down 24. Inside the NDX 100, what we have is this. The Charter Communications, is down 451. That's getting whacked good. This is the same old ones. Discovery Communications is down 107. You got Mattel. I guess we're not going to sell any toys this Christmas. Is down 77 cents. And Discovery Communications, the C shares are down 89. Putting juice into it is Micron Tech up 60 cents. You got Facebook up 142. Apple is up 173. And NXP Semiconductor is up 117. Small caps. What do you have with the small caps? They continue lower with volume. Small caps are basically leading the other indices, dragging them with them. Small caps, if we look at the IWM, are down 74 cents out here today at 111. And what happens at 111, so check this out, folks. This is already into your swing point from August. The high of that swing point is 111.70. Right now, we're at 111.63. That's saying, hey, guess what? We're going after that baby. The way this is setting up right now, she has the juice on the daily. She has the juice on the weekly. Yeah, in both cases. Last week we had come down with 215 million shares, and you're going into 227. So the small caps basically have this juice on the way down on a consistent basis. The small caps themselves are trading where they were trading in November of 2013. That says quite a bit. Each and every time they've tried to get to higher highs, no juice whatsoever. all the if you set up the channels inside the small caps, what you're going to see is this, is that you're going to see that each and every time that we're coming into those lower swing lows, your volume is expanded dramatically. You go to the top of the channel, gives it up with volume. Bottom, explodes the volume again. Top contracts. Bottom expands. The last time that we went up in the week of September 5th, they couldn't even make it to the top on that consolidation. That's showing you how weak it actually is. When you do sign up for the Nadex contest, folks, the trading contest, what you're going to also get is you're going to be allowed inside the Tiger's Den absolutely free for the full time that this contest is on. And then this Thursday from 6 to 7 o'clock, I'm going to be doing a webinar. All of that's absolutely free. So check it out on the front page of TFNN. We take a look at some of the Dow stocks out here. What do you have? We have American Express down 47 cents. You get Boeing off 98. Let's see. JP Morgan's up 25. You get Big Blue down $1. Honeywell's down $1.12. United Technologies down 76 cents. Some of the high flyers, Tesla. We go take a look at Tesla out here. So Tesla is up 87 cents today. That's a dead cat bounce. That did come down yesterday from 256 to 244. Is it, let's see, yeah, you get KMX. If you want to see something that gaps get filled, folks, CarMax, of course, that's the big retailer of used cars and light trucks. The low for the year is 42. The high is 54. And what you have here is that this had gapped away big earnings in June. Stock had gapped away from $44, gets up to 53, pulls back, and this is a big heads up so you can understand how you don't even think about touching these things until the whole gap is filled, particularly when you see a gap that is this dramatic, meaning from $44 up to 50. So it's a 15% gap. It gets down into the gap in July. In July, it gets to $49. Goes up and tests the high. When it tested the high on September 8th, it tested with 1.2 million versus 12 million. See ya, don't want to be ya. Comes back down. Now, this is how subtle this gets. So watch. You test the high with 1.2. You back down with 1.4. I know it's only 200,000, but guess what? It's higher volume. You come back up and test it with 2. You test it with 1.8. So you test this 1.8, 1.2, testing 12 million. Bob, boom. Today, you gap down 11% with 8 million shares, monster volume. This is going to go fill the whole gap. We're only at 47, 45 is the gap. You stay right there. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now down at 78. You got NASDAQ off 6. S&Ps are off 6.5. And if we go over and we take a look at the some of these Dow stocks out here, we'll start with Big Blue, IBM. So what IBM has done here, it's been a consolidation for quite a while. Right now we're at 192. Your lowest swing point out here is the 189. And we did 2.5 million backing down. Today that swing point only has 2.5. So that baby is up for game on the way down. We take a look at UTX, United Technologies. What you have with United Technologies out here, that's down 76 cents. And United Technologies, what's unique about United Technologies is this. That is not only off its high, but it's way off its high. United Technologies, made that high out there in June, came down with volume, and United Technologies very well may be an ABC structure on the way down. So what you have is this. Your A point on this on a weekly basis is $1.20. Your B point is 103. So you're talking 17 bucks off of your C, which is 110. So that's bringing it down to $93. Your C point on this is 103. Your volume is 23 million, and we did 19 million last week. Thus far this week, we've done 7.5. You know, so it will need some more juice, but that setup is pretty, well, the setup is clear that it's going to go test that swing point. We'll see whether it gets the volume at that swing point to basically set up that ABC structure on the way down. We go look at a monthly basis inside United Technologies, and what you have on a monthly basis is that this is like game, this is pretty game, yeah, this is game to 83 bucks. So if that's in fact what you get, what you'll see then is this. United Technologies has a high at 119 with 59 million shares. It came off that high with 103 million. So that's high volume off the high. High volume off the high equals larger retracements than expected. So the reality is that, guess what? This baby is basically coming down, it's getting taken apart, and what very well may happen inside this United Technologies deal, you know, we'll see if, in fact, that is a currency move. Because the fast move inside the currency markets, folks, the last 2 months are going to basically show in the reporting of numbers that we're going to be getting in the next 3 to 4 weeks. Because it's not just the dollar. So what you have is this. Of course, the dollar has gone up for 2 months. The euro has gone down for 2 months. The yen has gone down for 2 months. All those correlations for large multinational companies doing business across the world have ramifications. And most of the time, they're very big ramifications, because when you have fast currency moves, unless you're doing business in a country and keeping the money in that country, you're going to have ramifications on a very large basis. That's just how large international companies are. You know, if you're doing business in Europe, you bring it back to the United States, the problem. If you're doing business in, in any country, and you're keeping your expenses and your assets basically equal in that country, it's no problem, because it just means that's how it's going to be. On your balance sheet, it will look, you know, either stronger or weaker, but it won't matter in the bottom line. Let's go look at the future S&P right now. Why? Because you just got a nice little bounce going here. And for all you bears out here, this is just a little gravy on it here, big time. Why? Because what you get, and this is just acting just like a nice little market that wants to go lower does. What you have here is this year, they're at, what, 339? Yeah, you got 339. You've gone out here today, this morning. We got to a price point of 1988. You already had, when you had done that, you had that high volume swing at 1977. That's what it wanted to come down and do. It come down, it hit the baby. It has some decent juice at the lows. Most of this, I suspect, is you're just closing folks that have been trading all day long. You know, you can get a bounce up to 1982. That's pretty easy. All that is hit nice again. What that does, that sets up in the morning for day traders to basically fire right into that baby again. That's how it's set up. If we go take a look at the SPY, you want to see that correlation inside the SPY. What you have with the SPY is this. Same type of setup. The SPY was going after the 198.29 level. That's where you had volume. It went after it, got it. You know, now you're coming back up to ICE, and ICE is basically set up at 198.61, and right now we're at 198.54. So it's going to be wild watching this whole thing shake out. We had a question about natural gas, so let's take a look at natural gas. Natural gas, where is she? Natural gas is down 0.5% right now at 328, 382 rather, sorry, 382, and you have light volume, no doubt. So natural gas is in this consolidation. The consolidation that we're talking about, the bottom of that consolidation is 376. Let me go look at the correlation inside the UNG. I'd wait for the 376, number one, and a rejection of that lower price. We take a look at UNG. UNG right now is at 20.81, and you want a rejection of that lower price also. At 20.59, so I wouldn't be biting on that just yet. Some of the other some of the other commodities out here, we have nickel's getting smoked. That's down 4.5%. Corn's off 1.5%. Lean hogs are down 0.3%. Rebarb, the gasoline market, is up 1.6. Let's go look at that and see what's happening in that market right there. Crude oil is up 0.6%. So we're up 4 pennies in natural, unleaded. You get 25,000 contracts traded. It's a beautiful thing. That's weak. So check. This can get to, we're 262.70, 263.47 to 266.40. I said 263.47. That's ice. It can get up there. Volume is dying on the vine all the way up there. And that's, folks, bottom line, after we get a bunch of heating action on the Middle East, okay? There's a lot of bombing that's going on over there. Bottom line is that it's not moving the price of oil. Actually, let's go look at oil. CLX FOA. The oil market out here can't get out of its way. So this oil is going to get croaked. It's pretty amazing. Right now we're at 91.46. This is an ABC structure on the way down to $85. So I guess it shows on, well, technically that's how it's set up. Fundamentally, it's basically screaming that we have quite a bit of oil, evidently, in the U.S., and it makes a difference. It's all about supply and demand, folks. It's all about volume. How much demand is there versus how much supply there is. Some of the retail numbers that come out, the back-to-school session, that's why these retailers have been getting killed. That was the slowest back-to-school shopping spree there has been since 2009. They expect coming into the Christmas area that they're worrying that folks are going to buy less. I think folks are going to buy less, period. I mean, the bottom line is that George Carlin, we have too much stuff. That's the bottom line. We have stuff. We have what? We have storage units to put stuff in. We have garages to put stuff in. We have backyards to put stuff in. And I think people would just want less stuff, So they want less stuff, and then, you're going to buy less. And I suspect after, 2008 downdraft, people are a lot smarter saying, when cash is tight, do I really need another shirt, pair of pants, whatever that is? Would I have been better off saving that money, having cash in my pocket? And I expect, that answer for basically everyone is, yeah, I'd rather have the cash. That's what it comes down to. So that downdraft was so dramatic, that's going to change perceptions of how people are going to shop for quite a while. One of our tigers in the den, he's got me going. It's really good. So he just put, I need a shirt. I just lost mine. 877-927-6648. Let's go take a look at KMI. Yeah, he didn't lose the shirt because he's trading 8X. He made a trip to the Four Seasons. Kinder Morgan. Let's go take a look at Kinder Morgan. Kinder Morgan is up 80 cents. Now, Kinder Morgan is a pipe transportation company. Pays a 4.4% dividend, and almost filled the gap. Didn't fill the gap, though. So, huge sign of strength. Went from 37 to 42 on 8/11. If you want to see how something comes all the way back and fills it, it's pretty intense, folks. It's not filled yet. The bottom line, I know it's still a risk when it's not filled, but 36.15 is the fill. It got to 37.32. This is Tom O'Brien. This is TFNN. Don't forget, folks, come over to our website at TFNN. We're going to be giving away $10,000 in cash next week. All you have to do is sign up. It's absolutely free. See it right on the front page. You'll also get in the Tigers Den and get in my webinar this coming Thursday night. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 78. NASDAQ off 9.5. S&Ps are off 7.5. And don't forget, folks, over to our website at TFNN. You know, one more day to sign up. Actually, today's Tuesday? Yeah, we had 2 days. For our $10,000 virtual trading contest. It's right on the front page of TFNN. Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. I want to thank you one more time for pinpointing the entry point on the TLT.
Well, we appreciate you growling and prowling out here with us, Sam.
I appreciate you helping me making money. I bought it at 113 and 13 cents. I was wondering if I should hold it or unload it or put a trailing stop.
Yeah, no, I'd hold it. Put a stop under 113.22. And where I'm going with that, see, I'm not going to the bottom, folks, because at the bottom, that was a spike last week down to 112. What I'm doing is I'm basically taking where the swing point was from August 4th. And August 4th, what you have, August 1st. Taking the swing point of August 1st, which is the 113.05. That had 14.5 million shares. When we came down on the December 12th, it got to the 22 with 11 million shares. That was your rejection right there. You know, so what happens after a downdraft like this, too, Sam, you don't even want to see it get back into that area. Do you know what I'm saying?
Yes, sir.
Until it gets higher. So it's like, yeah, you don't have to give this much now. And I just keep bringing it up. If you get another day of strength, then I would have you tuck it right under the 114.68 where it had the strength from Friday. Do you know what I'm saying?
Yes, sir.
So you can hide it under there, and there's no such thing as hiding it, folks. But what I just mean is that what you like to do is put it under high volume days. That's how it is. So, and you don't put it at the top of it. You're trying to get it under a bit. So price likes to come into those areas, but the reality is that it's hard to break those areas down. If it breaks them down, they're going to go a lot lower. So.
Great. Do you have time for another question?
Sure.
Great Panther, GPL.
GPL.
Yesterday, I'm very novice in gold trading, and I bought it at the low of yesterday.
Yeah, just hold it. Great Panther yesterday, folks, had wide price spread, destruction with light volume. And on the daily, it looks like it's heavy volume, but what you have, folks, is 1.8 million, and what you're going to see it with Great Panther. This is the classic of how bottoms get made. It was going into 9.4 million, and we're going to end up doing about 4 million this week. That's going to be a rejection of lower price, fast price destruction, no volume. You know, Great Panther wants 149, man. Just stay right there. That was pretty intense what happened yesterday, there's no doubt, though.
Thank you very much.
Okay, man. Have a great one. Have a safe one. And what you do have, now this is what's really intriguing, folks, okay, is that there are a couple silver stocks that, you know, Great Panther, one of them. Great, if you're looking for something, Great Panther's a great stock, period. You know, there happens to be another silver stock also. And listen, you can go test drive the gold report for nothing for 30 days. Go do it if you want to find it out. But it is intriguing. When I was doing the gold report today, what ended up happening is I said, oh, this is wild. Because, see, gold is already back inside, or it's making, well, here, let me pull this up. Gold is making its way, no, gold is back inside. Gold is back inside, no, it's not back inside yet. It's not back inside the 1240 area. But what gold didn't do, which silver did do, is this. So, GC1. Let me put this up. If I put the continuous contract up, what you're going to see is that gold didn't break out its June low and June low of 2013 and its January low of 2014. It didn't do it. You know, gold would have had to get down to 1179 to blow that out. And we only got to, on the continuous contract, we got to 1208. Silver, however, did. Now this is what the correlation is. So watch the SI1 to get the continuous contract. In silver, we got down to 1765. Light volume out here today. But what silver did do is break out its lows from high volume on 2013. So silver has to get back inside 1818. But yet, when I was going through all the silver and gold equities, a couple silver equities actually have already made it down to those levels, rejected lower price on dramatically lighter volume on the monthly basis. And that's what you're looking for. You're looking for that type of divergence, that they actually make them, you know, because we're talking about two large lows. We're talking about a 1.5-year time span. We're talking about the metal came down and broke them, silver versus gold. Then you're talking that the equities actually got down there and tested that area and showed, guess what? See you, don't want to be you. You know, so the bottom line is that, we'll see where this whole thing shakes out, but it looks to me like that we are going to have the dollar take a rest here, and the metals are going to try to build some cause. What the metals absolutely need is that they need wide price spread, accelerated volume. You know, that's what it comes down to. A couple of the, if we take a look at Royal Gold and you take a look at Franco-Nevada, those are going to test their lows again. You know, they came down way too much volume yesterday. You're at 65.31 now. 63.86 was the low of yesterday. That baby will get tested. FNV. And both of these are royalty companies, by the way. FNV actually looks stronger, though. FNV came down there. Yeah, FNV looks like it's going to build some cause, actually. Franco-Nevada is trading at 50.25 right now. And on the weekly basis, they look good. See, because last week Franco-Nevada came down with 3.5 million, going into 3.10, but that's way too much. But guess what? It didn't make it to the low. This is the week it made it to the low, and thus far we've only did 1.6. So you can see, well, I see 1.6 is still too much. 1.6 is still too much. Both of those are going to get tested. When you're doing the volume characteristic this week, what you have to do, folks, is this. You're on Tuesday in the market. You got to basically take a look at it and say, okay, if I'm doing this and I'm going out further, what's it going to be? Oh, they're going to smoke this market. Oh, baby, come to daddy. Here we go. Look at this. You know, this is pretty wild, folks. Watch this just as I'm talking here. You can see, first they hit Alibaba. This is hilarious. So they hit Alibaba. That's down $3 right now, 314, going lower with juice, by the way. What time is it? Oh, we got 2 minutes. That's a beautiful thing. Okay, so as they did that, what ends up happening in the S&Ps, someone just threw something at the S&Ps, man, and they threw a big number at it. Yeah, S&Ps are down 10.5, and yeah, look at that spike. That's not you and me, folks, throwing that spike in there. Someone just came in there, and that's going to be an operator, a large operator. They just threw a bunch of contracts in there. It's going to be a nasty night, folks. You stay right there, folks. So we're going to be coming right back. Dow's down 104, Nasdaq off 16, S&P's off 10.5. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote's by Walt Anderson. Believe in something big. Your life is worth a noble motive. No doubt, folks, right? This is it. As they say, this is not a dress rehearsal, baby. We're here. Make it happen. Market-wise, let's take a look at it out here. We had the Dow Industrials down 116, Nasdaq down 19, S&P's off 13.5. Gold contract up $5.70, traded at $1,223 an ounce. Silver up 26 cents at $17.80 an ounce. Light sweet crude up 67 cents at $91.54 a barrel. Bonds, we had the 10-year up 9 ticks at 124.18. 30-year up 25 ticks at 137.17. Both the 30 and the 10-year, folks, wants much higher price, much lower yield is coming at us. King dollar off 88 ticks at 84.77. The euro is up 8 at 128, and the yen is trading flat at 108.85. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're at 1982 cash S&P. Your swing point is 1978. We're going to go after that baby tomorrow, and I expect we're going to go after it with a vengeance. Today we had an expansion of volume. Not really huge wide price spread, but what we did have coming into this close out here, folks, is that some operator not only hit the S&P, they hit it with a vengeance. And when I'm talking about with a vengeance, you know, if you're in front of a computer or a bottom line, we were at 1981 with 10 minutes coming into the close. S&P is down 10 points, and it's not the 10 points that does it, okay? 10 points is a huge handle inside the S&P, by the way, okay? But what you had is someone threw basically 103,000 contracts on the first 10-minute bar, and on the second 10-minute bar, they threw 95,000 contracts. Just to get you an idea of what that is, okay? So you got 21,000 contracts. That's over about 10% of the day's contracts on the close. Bottom line, someone is basically betting in a big way that we are going to be basically down overnight and down tomorrow morning. You know, technically, it's there. Why? You had Europe down hard. The FTSE was percentage-wise, this is what you had out here. You had the FTSE. Now, check this out. We're not even down a lot. We're down, the Dow's down 0.6%, even though it was 116 points. We talked about that yesterday because we were at high numbers. You don't have to be down a lot to get into triple digits. S&P is only off 0.4%. The NASDAQ hardly moved. That was down 0.4. However, Europe, okay, went down with wide price spread, accelerated volume. The FTSE was down 1.4. The CAC and France 1.8, and the DAX down 1.5. Bottom line, lower prices are coming at us. Bond market, higher prices coming at the bond market, lower yield. Right now, the 10-year is yielding at 2.527. If we go take a look at how that baby is set up, what you have is that TYZ4. So the 10-year out, what the 10-year did out here today, come on, baby. There she is. So weird that it's supposed to be the currency key, but they want me to hit the commodity key. Okay, so the 10-year does 825,000 contracts today. Has some juice behind the move. I suspect we're going to get up to this 125.12 pretty quickly. That's almost a full point in the 10-year. And for the 10-year to move a full point, that's pretty intense. That's a lot, folks, okay? 30-year can move a point, and it does it many times. But if we go take a look at the 30-year now, what you have in a 30-year is stronger than the 10-year. 30-year up 25 ticks today. 245,000 contracts. In the 30-year, I expect that you're going to see that baby get up to somewhere about 139.11 pretty quickly. King dollar. What do we have with King dollar? King dollar is trading right here today at a price point of 84.78. You did 24,000 contracts. What King dollar has already done is this. King dollar's made it full 100% move or move, tested the high with lighter volume. Then what you had is that today we're just hanging up here with light volume. That's telling me that King dollar wants to back off a bit. So I'm going to give you both scenarios here, okay? Because with King dollar, it's really important to understand what's going on. Because if I've learned anything inside the markets, is this. Fast currency moves are one of the most dangerous deals inside the markets. And it's just not the dollar, because it has to do with the dollar, because the dollar wants a lot higher price, folks, okay? My takes the dollar wants 89. If you break 89, guess what? We're at 121. We're talking 4 or 5 years now. But bottom line, big implications. Right now, I'm in the camp that the dollar wants to back off. And the reason being, and that's on a short-term basis, because the dollar wants higher price, it's done everything that it should have done, meaning made a nice bottom. Well, first off, went from 121 down to 70. Made a nice bottom, been building cause for 6 years. It's higher. The rest of the currencies are basically done. The countries are done. There's a lot of implications in this whole deal. The dollar, when you make 100% move for move, bottom line, a normal retracement can bring the dollar. The dollar's been up for 2 weeks flat, 2 months rather. You bring the dollar down to this 82.97 area. And I wouldn't be short in the dollar, by the way. I'd be waiting for it to buy it again, okay? bottom line, that's what that setup is. Okay, so that's one setup. That's a setup that dollar wants to pull back, normal type of market. The other side of that, if in fact the dollar freaks out and goes topside and takes this B point out after only going sideways for 5 days, which you know can be done, because that's 100%. Well, that's like going sideways without a retracement. If in fact that's what happens, man, you better just make sure you have stops all over the place in the marketplace, folks, because the amount of price destruction that the dollar would throw in economies across the world ASAP, well, the amount of price destruction they'd throw in our large multinationals would be intense. That's what it really comes down to. So at this point, my take is that we're going to back off. And the reason for that is that the metals market itself has tested dramatically lighter volume. The dollar's done what it's supposed to do, you know, all of the above. Our markets, the amazing thing to me when, you know, this morning when I saw that even the market's down, it just cracks me up that, you know, on a continual basis that most analysts think that you can go higher on a continual basis no matter what is going on in the world, or no matter how long we've continued up. It's like, oh, really? And I can understand why that, you know, it's been a Teflon market. There's no doubt about that. Bottom line, folks, is that nothing goes up forever and nothing goes down forever. That's the logic correlation inside of that. What you do have happening out here, though, is that there's large operators. If we go back to this S&P sell for sale, well, actually, hold it. I'm going to go to all the indices. Because you know what happens, folks? What's so cool about just being in the market in general, but being in it for so long every single day, is that when markets get hit, let me see, NQZ, most of the time, those large operators, they don't hit one market. They have this trade set up and they hit every market. So if we go over to the NASDAQ futures, sure enough, they were hitting the NASDAQ futures simultaneously when they were hitting the S&P futures. So not as heavy, but they hit them. With the NASDAQ futures, they hit 11,000 contracts. The S&P futures, they just destroyed, man. Let me see. ESZ4. Yeah, they took this baby south, and they took it south with a vengeance. And more than likely what they did simultaneously, yeah, you went down with 103,000 contracts and 98,000 contracts. If I had enough time, more than likely what they also did is this. When that phenomena happens, yeah, on the SPY, they turn around and hit the SPY with 8 million shares. So that's 8% of the whole volume for the day in 1 minute. So they hit that with 8 million shares. But more than likely what they also did. So this is the way you set up a trade like this. This is pretty cool. So if you're an operator and you knew you were going to do that, the first thing you would have done is you would have went in and the option market. In the option market, you would have had a slew of puts. Now, this is all simultaneously. You hit the option market with the puts. You hit the... and as the puts are getting hit, you hit the futures market, and then you hit the S&P, all simultaneously. Ba-boom! See ya! Don't want to be ya. You stay right there. We'll come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 116. NASDAQ down 19. S&P's off 13.5. And as we do each and every Tuesday, folks, at 20 past the second hour, we get our man, Mr. Andy Hecht. Don't forget, Andy has a program on every Tuesday, Thursday, right after me, 5 to 6 Eastern Standard Time. Also has an outstanding newsletter, the Technomento Commodity Report. The way you can test drive that, folks, is come over to our website at TFNN, go into newsletters, trading newsletters. You see the Technomento Commodity Report right there. Now, as you're over at TFNN, you can see right in the front page, folks, you have 2 days. Well, actually, not full day. You get a day and a half to sign up for our $10,000 trading contest. That is... You have until Thursday at noontime. It's free. It's on the Nadex platform. It's going to be a dynamic contest. Check it out on the front page of TFNN. When you sign up, you also get into the Tiger's Den for the full time of the right away. And you're also going to get into a free webinar I'm doing on this Thursday night. Andy Hecht, what's going on?
How you doing, Tom? A little tired today.
I bet you're a little tired.
I was up basically all night long last night trading markets.
That's a beautiful thing. And then I heard them promoting you on CNBC today, man. Were you on?
Oh yeah, I was on Futures Now talking about gold.
You know, it's so fun. Oh, I should have listened to it, man. I'll
send you the clip.
Yeah, good. Send me that clip.
I'll send you the clip. Listen, very interesting. You know, I don't talk about stocks much.
Yeah.
I'm a commodities guy.
Yeah.
But I got to tell you, I think that stock market's going to get smoked tomorrow.
Listen, man, you're talking to the right guy.
Okay, I got to tell you, that setup on the close, this Alibaba thing, to me, marked the highs.
Isn't it crazy? It's crazy, Andy. Do you know that Alibaba in 2007 marked the highs in the Hang Seng market,
I got to tell you, they pumped this thing up so that all the investment banks and everyone who put this IPO out there can make as much money as possible. And you know what? I think that might be, we might look back at that in a couple of months and say, wow, that was the high.
It's going to blow my mind if this is the case, folks, because picture something. It's very unusual that you make a stock, bring it public, and you buy all the shares back. In fact, it hardly ever happens. Well, Alibaba did it, but they did it, and it's like, oh my God, you got to be kidding me, man. It's just,
are they going to do it again? That would be something.
I don't think they'd probably do it again because he scored beyond belief. Do you know what I mean?
He scored beyond belief.
Yeah.
But this is going to have huge effects. And like I said, I was up all last night because when we started bombing Syria, I started watching markets.
Okay.
I have some positions, as you know. I'm short gold. I'm short oil.
Yeah.
I wanted to be very careful. I covered the gold, but put it out again higher because it never got up to that 47 level.
Okay.
Crude oil to me has acted so bearish through this, Tom. It's not. It's uncanny.
It is. I know.
We're looking at the light sweet crude.
Yeah.
But take a look at Brent. That sucker's down on the day.
Yeah. That's because Europe is toast, man.
That's right. And take a look at the products. The crack spreads are down today.
Yeah.
The products are lagging. I mean, RBOB gasoline is kind of unchanged. The heating oil, where we're in the season, that's down another 85 cents on the crack spread. This looks terrible to me.
And you know what happens, folks, is that when you have disruptions, which we have, in the Middle East right now, in Europe, basically, and oil doesn't move, guess what? It's not going to move.
80 handles coming real soon.
It's going to move, but it's going to move the wrong way. Exactly.
That's right. And you know what, Tom? Open interest isn't big. So, in other words, what we saw in open interest in crude oil, in light sweet crude, is we saw about 1.76 million contracts back in July when all the craziness started with Russia and with ISIS and everything. Now we're down to 1.479. That's a big drop. That tells me that all the longs got out, but there's no shorts.
Okay.
So the next wave we're going to see, and it's the same thing in gold, I see both things. I'll put up a gold chart for a minute with open interest.
Yes.
You'll see how open interest tailed off there big time. Went from 413,000 contracts to 385,000 contracts. The next, when we break support levels, then you'll see open interest big. When the trend-following systems get in and get short, then we could start talking about bottoms. This is my view here.
Sure.
So, I mean, very interesting action on the close. And I thought you did a really good job describing how they go about, buying the puts, whacking the futures. And this was very coordinated today.
Oh, yeah, big time. And,
and they waited.
Folks, Andy's done the trade, I've done the trade, and it's dynamite doing it.
It's lots of fun, especially when it gets right. When it goes wrong, it's not so much fun.
No, when it goes wrong, it's a bum. When it goes right, folks, it's a trip. Because what happens simultaneously is that you don't get to see it, but you know the feeling, because you're hitting one after the other in different exchanges, and the key is just to get the thing rolling. And that goes both ways, too, by the way.
We got to keep our eyes tonight on the Nikkei, on the Hang Seng, tomorrow on the DAX, on the FTSE. If these things follow through to the downside, we're going to have a very ugly day here tomorrow.
Well, what's amazing is that the last 2 days, you're down $100. Big deal, right? We're not even down a couple percent, folks, okay? Would get you numbers.
We're still high, very high.
I know, and so that's what's really strange, but I know the perception of people is that, oh man, we're down a lot. It's like, hold it, no, you're down 0.6%. So check this out, folks. I remember, and in fact, I'm going to bring this chart up just so you can see this. Andy, I was going over this on the air, I don't know, sometime last week or the week before, right? And I was going over the context of retracements and the types of retracements that we've had in the marketplace. And when I was doing this, I had gone back because I remember in 1994 that there was a retracement, and what had happened is that everyone was so fat and happy, right?
Right.
That this retracement, folks, so check this out. And I'm telling you, folks, this wiped out almost, not every trading floor, but this wiped out trading floors like big time. And the S&P only went, folks, okay, from 1190 down to 939.
Right, it's the leverage word.
Well, because this is what ended up happening, folks. Because the market had never gone down, okay, since 1994, since 444 up to 1190. Because I remember, you know, I never did it, but I remember guys beside me every single day. You know, I was just day trading, and every single day they would just put positions on overnight. And I remember they walk in the morning and make so much money. I'm saying to myself, man, this is sick.
Absolutely. Tom, one other thing to keep in mind. Tomorrow is a pretty thin day. It's Rosh Hashanah.
Oh, is it?
Jewish New Year.
Okay.
So it's a thin day. So it's going to be very interesting what goes on.
So what is the, okay, so there's a saying, too. Do you sell on Rosh Hashanah or buy?
I've heard that. Someone said that to me at CNBC today. You buy Rosh Hashanah, sell Yom Kippur. But, you know, I don't know. I never pay attention. That's like sell in May and go away. That's like all of those things. They work until they don't.
Right. No,
I figure that's like tossing coins for money.
Yeah.
But this action on the close, going into what I think will probably be a pretty thin day tomorrow.
Yeah.
I mean, you know, there'll be stops out there, but it'll be, you know, there won't be the whole population there tomorrow. So it's going to be interesting.
Hey, just stay with us for a second. I'll get you more tired since you've been up all night. It's a beautiful day.
No, I'm fine. I got to do my show after this.
That's right. I know you do, man. I know you do. You stay right there, folks. Andy and I are coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Well, there's no mercy in this futures market right now. And don't you forget, our man, Mr. Andy Hecht is coming up right after me, 5 to 6 Eastern Standard Time. All this programming, folks, you can get right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV with all the audio, video, just go to tfnn.com, hit the TV on the right-hand side corner. You'll get Tiger TV, which is the audio plus the video. If we go over to those future markets right now, bottom line is that they're still hitting them, and they are actually hitting them. There's not, of course, after the, well, the future's going to trade all night long. But the bottom line, they already got it down to 1968. And there's some juice here, man. There's some juice. We got action. We're talking with our man, Mr. Andy Hecht. So you're going to have an exciting show here.
Oh, yeah. Well, you know, they're really hitting these E-minis here, and I think it's going to follow through. You know, I've been getting some emails while we were on for the break, and the consensus is it's buy Rosh Hashanah, sell Yom Kippur, but I guess when it comes to stocks, maybe not this year.
Yeah, exactly.
So markets are interesting. I mean, I heard that you had a caller about natural gas.
Yeah.
And I continue to like natural gas scale down to the recent lows. I think those lows are going to hold because of seasonality.
Yeah.
I think that inventories... You want to hear something interesting about natural gas, Tom?
Yes.
Natural gas, the last time... There were only 2 times in the last 11 years that natural gas prices, natural gas inventories were around these levels. And that was 2004 and 2005.
Okay.
And in 2004, the low was about 460, and in 2005, the low was about 650. So we're below the lows for those years where the inventories were close to where they are now. Now, of course, we have much more natural gas now because of the Marcellus Shale,
right.
But we really depleted them. So the temperature this winter could provide really turbocharge those markets once we go into the withdrawal season. I mean, I don't expect this to happen in the short term, but if we get a very cold winter, be prepared. Put your seatbelt on in terms of natural gas.
Yeah, and the folks in Europe really going to have to put their seatbelt on because Putin is going to basically turn it off on them. So
he's either going to turn it off or he's going to gouge them.
Oh, yeah, he's going to do both. I expect that's right. He'll gouge them first. And then if they don't pay it, folks, it's going to get turned off. And see, what you have happening, this is the volatility that's coming across all markets, folks, because, so picture something, is that there's so many things happening at the same time that is the perfect time to basically throw that nail out there, too. Because the fact of the matter is no one can do anything about it except either pay it or freeze.
That's right. Yeah. That's right. The world is a little worrying.
Right now, there's no doubt. There's no doubt.
There's a lot going on. I mean, while I was up, listen, I am rarely up at 2:30 in the morning.
Yeah.
But I was up last night, and, we saw something come across the tape that an Israeli fighter plane shot down a Syrian fighter that wandered into their space. So there's a lot of stuff going on over there right now.
No, there's no doubt. There's no doubt.
And it's, it's going to affect markets. And I'll tell you, this stuff is not bullish for stocks. No question.
No, it's not. And the thing that's amazing to me is that, you heard this on a continual basis, and, we'll see whether, I heard it all day today, too, that, hey, listen, this has been happening across the world, the last 6 months, and the markets, don't care about it. Folks, that's insanity. Okay, if you think we can sit around and drink our six-packs and have a beer and watch football games and the market continues to go up when the world is basically at war in a million different places, whatever you're eating for breakfast, you better eat another one because the bottom line is that that's not how the world turns, So
exactly. And what I see with the action in commodities, and I talk about commodities. Look, there are several commodities prices that I like here. I like coffee. I like cocoa. There's fundamental reasons to like those. But if I talk about the macro sector, what I'm seeing is it's perfectly set up for de-risking, and that's what you're going to get if you get a big move down in the stock market.
You are, because what happens, folks, is that it has to do at that particular point of what money you have, what do you want to put it into, And another deal that's out here that, has basically been lying out here for a while is Ebola, I mean,
that's why I like cocoa so much.
No, listen.
Cocoa is in Guinea, it's in Sierra Leone, it's in Nigeria. The other two big West African countries are Ghana and the Ivory Coast. They produce the lion's share of cocoa beans.
And listen to this number, folks. This is like sad. I mean, this is so the CDC come out today and said that without better containment, I'm reading the quote, the Ebola outbreak, there could be 550,000 to 1.4 million cases in Liberia and Sierra Leone. But guess what? We're talking about by January. That's insanity.
An ugly
folks.
Prospect.
That's insanity. So.
Listen, the president wouldn't have sent 3,000 troops to West Africa if they weren't really worried.
Yeah, no, I know what you're saying. And one of the questions Danny from Atlanta is saying, does cook and kill Ebola? Because the next thing I start thinking of, even when you start saying this, saying, oh, man, hold it, the cocoa trees, do I want to start eating chocolate? I love chocolate, man. So it's like, oh, man, how does that work, right? That's wild. Let's go to David in Denver. Hey, David, what's going on?
Good afternoon. Thanks, Tom, for all you do for all of us.
We appreciate you growling and prowling with us out here.
You betcha. Question for you on AXDX, and that two questions. First question is the 113 high volume low of 1101 game, in your opinion, particularly given the high volume high and immediately following high volume decline following that high.
So let's look at this. This is XDS, it's Accelerate Diagnostics. They develop diagnostic systems for bacterial infections.
Correct.
Low is 940, the high is 31. This blows my mind. They take no money in. This is like crazy. They take in, was it 30,000? They taking $7,000 a quarter. So
right.
they taking $48,000 in a year. I got to look at this again. $48,000 in a year, and they have a market cap of $751 million. Oh my God, that's about as sick as you get. Okay, so let's bring this back. This is like insanity, folks. So they're taking as much money as you know you could. Okay, so the question is, you get the high volume high. What a mind blower that is. Yeah, I mean this. Don't touch this stock. This stock, I mean, this stock is going to make its way down to $7.80. The real question is, if it gets underneath that, then it's going to be $2.28, and then I'd take a shot at it because it does have a high volume high of $21.85.
Okay.
What the heck does this? This blows my mind.
It's really in development.
Do they have any money?
Yeah, they got some money. Mm-hmm. Got some big players and a lot of concentrated ownership, but it's still in development. So
yeah, no, which makes sense because you know what's so weird about this one, David, right? Is that you take up plenty of biotechs, folks, that make no money, just like an exploration company, they make no money. But when they only make like $7,000 a quarter, it almost looks weirder. Do you know what I mean?
Yeah. Oh, yeah.
Yeah, but I can see there's players in here. There's players in here for sure. Yeah.
Yeah.
Okay, man.
Very good. Thank you very much.
Thanks for the call. Have a great one, man. Have a safe one. It's pretty intense. Biotechs, man.
Yeah.
So, hey, listen, cattle. Let's see, where's the cattle market? Hogs are down 24 today.
Kind of quiet.
Yeah.
Kind of quiet. You know, look, as I've been saying for a while, two things in cattle. You got two things going against each other. On the bullish side, Tom, you got small herds, you got lightweights, you got an increasing global demand for beef, and you got the fact that the U.S. is going to be a net importer of beef next year.
Yeah.
But on the bearish side, we're definitely not in grilling season anymore. You got feed prices. I mean, I don't know if you're watching these grains, Tom. They make a new low every single day of the week.
That's intense,
so,
right?
Animal protein producers are going to, raise herds as fast as they can in cattle, given these high prices. And you have a market that looks like momentum is turning. The trade I like here is short cattle but long hogs against, because it's, like I told you, it's my what's for dinner trade. If you look at the December versus December, pork is like at a 66% discount to beef.
Yeah.
So I'd be, that's how I'd hedge that trade. I'd buy the hogs and sell the cattle here.
Yeah, it totally makes sense because it's definitely going to be it is a pocketbook issue right now, and it can get to be more of a pocketbook issue. Folks, you stay right there. Andy's going to be coming back with you at 5 o'clock, 5 to 6. Don't forget, you can test drive his newsletter right now by coming over to our website at TFNN. Go to newsletters, go to trading newsletters, you see the Technomental Commodity Report. Andy, you have a great one, safe one.
I'm going to run off and get a cup of coffee and support my position.
15 minutes. I like it. It's a beautiful thing. Stay right there, folks. We're coming right back. Dow down on 16. Nasdaq off 19. S&Ps are off 16.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And you talk about some destruction. This S&P coming after the close out here. Of course, the S&Ps are going to trade all night. But what you do have out here is the downward pressure continues out here, folks. And I expect what you're going to see as Asia gets open, you're going to see that baby go south also. Right now, you got the E-minis are at 1969. Just to give you an idea, too, you know, we were at 1979 right before the close. And if we go this morning, of course, we're at this 1984. So there's some action on the downward side out here. BBBY, let's take a look at Bed Bath & Beyond. That closed at $62.69. That is trading at $67, up $5 right now. That's a beautiful thing. Let's go take a look at that. So she's going to be into the gap. She's got a gap up there at the 68. And numbers, let's see. So we'll get some numbers. Bed Bath & Beyond. Didn't fall. There's no way. Let's see. Bed Bath. It's so funny that the headlines are saying Bed Bath & Beyond's fallen, but there's no way it's fallen. It's up $5. So Bed Bath & Beyond. Okay, the estimate was $1.20. This is pretty wild. The estimate's $1.20. They came in with $1.17 to $1.21. Fourth quarter estimate was $1.78. They came in $1.78 to $1.83. Bottom line is up $5. I don't know where the headlines coming in. It was down. Maybe it was down at one point. Let's go to Terry in Orlando. Hey, Terry, what's going on?
Not too much, Tom. I'm in the middle of a rainstorm. I don't know about you guys over there on the coast.
When you get rain in Orlando, man, do you get rain.
Yeah, we do.
It's amazing, isn't it?
Yeah.
You don't want to be stuck in rain in Orlando, and I have been. It's pretty intense, man.
Yeah, there's cats and dogs coming down.
That's a fact. What are we going to look at?
I was hoping to catch Andy before he left, but I'll definitely listen to his show. But I'm wondering if now might be a good time with gold firming up to look at platinum, PLAT.
You know what you would have to do? Call Andy, when he starts the show. To me, Andy sold gold, when it bounced today. I'm a bull in gold right now. Andy's a bull. Andy's basically a bear. So I would call and ask him that question, okay? Myself, at 1332, yeah, I like that deal. Get gold. I like that deal of gold because when I'm looking at gold, well, here, we'll stay with platinum. If we bring this platinum baby back, okay, and we take a look at a monthly basis, what you have happening is that you're right at the lows that were generated out here in June 2013, which is $12.94. And it's like, can it get down there? Sure it can. But the bottom line is that, Andy's actually right in the Tiger's Den right now. He says, I like platinum. It has good fundamentals. What he also likes, he likes to, trade long platinum short gold. See, because what happens, this is what's amazing, too, right now. Where we're at is that with platinum being at 1332 and gold being at 1224, there's so much less platinum in the world than gold. It's amazing, okay? And, what will happen and has happened with platinum. Now, what happens with platinum is that it is much harder to get out of the rock. So it's more expensive to mine. It's harder to get. There's less of it. And then on top of that, what you have is that one of the largest platinum mines in the world, bottom line, there was a strike. That went down. And, then what you also have is that, in Africa right now, there's a big problem with Ebola. So, there's going to be less platinum. So platinum is the trade, man, no doubt.
Okay, you don't expect it to go down much lower? Is it a good entry price here?
No, platinum can go down.
Well, I was thinking support at about the 35 range, 35 and a quarter for the ETF.
Oh, the ETF. Oh, okay. Hold it. 1 second. I was pulling up the future. What's the symbol for the future?
PLAT is the ETF I'm looking at.
Okay, hold it. I can't get it. 1 second. Oh, PPLT. I got it. Right? That's the one you're looking at. The PPLT, right? The ETF Platinum Trust?
Let's see. Hold on 1 second. I just pulled up PLAT.
Okay.
The Platinum Mining Index. The FTSE/JSE Platinum Mining Index.
Oh, that's all right. Here, let's do this one. I'm gonna pull up the PPLT, okay? Because that's what does trade.
PLT, okay.
And it's liquid. It's at 129.47 right now. We came down last week with 290,000. You're going into 330, and you're going to 500, which is nice. This week we've done 57,000. versus 290. Oh yeah, it's beautiful. Yeah, I'd put that trade on. So you're at 129.47.
Right.
You would put a stop under the lows, under 127.34. So you're giving it a couple dollars, and what you're looking for, it would have to build some cars first. You know, can it go to 137? Yeah, but it would still have to go to build some cars, man.
Okay.
Yeah. Cooking, brother.
All right. Thanks.
Have a great one, man. Have a safe one. Yeah, it's going to be interesting watching this whole thing shake out. And what you do have, folks, is that a couple of the there's a couple articles out there, and Andy was talking about it too, about silver really going to crash, and having to do with the price that it costs to produce silver. What happens, folks, with all these producers is that if you're a gold producer and you get the byproduct of silver, which they do, silver, copper, and all that, what ends up happening is that in that context, they take it as a credit. If you're a silver producer and you're getting gold in there, you're taking that as a credit. So the bottom line is that those numbers, okay, basically most of these companies out here, silver companies in general, have a lot of gold inside it, and they don't need a huge amount of gold in order to make those silver numbers look that much bigger. You know, so the bottom line is that the take on it, yeah, it might cost $3.67 to get silver out of the ground, but that is not the same context as $11.79 of gold, because of the fact of the matter is that they have byproducts that are in there that basically pump that silver price down in correlation to, you can imagine you get 2 or 3 ounces out of gold out of the ground, and you're a silver producer. They take that, they put it into silver ounces, and that's how they do it. You stay right there, folks. The man, Mr. Andy Heck's going to be coming up, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Stay right there. Andy's coming right up, folks. Right now! Go get him!